Hello, everyone. Welcome for joining. Welcome and for joining us this morning. Thank you for joining us this morning, I should say, and welcome. And mostly, welcome to this educational presentation of should you be bullish or bearish? This is a very popular question these days, is with the activity of the market. And I got the idea for this particular presentation last week. I attended a function, and this was prior to a lot of the big moves that had happened in the market. And a lot of people I heard discussing what they thought the market was going to be doing or what was going to be happening in the near future. And then finally someone came up to me and asked and said, Steve, what do you think? You're involved in the markets. Should you be bullish or bearish? And so I got the idea for this presentation from that question, and I prompted all of them to be included in today's presentation and to watch this so they could get a better idea. I'd like to start out with some statistics in order to give you a better idea of how to come to this conclusion about what the market is going to be doing, because the facts are 80% of all traders lose money. All right, and when we say lose money, I don't simply mean that you're going to go into a slump or a drawdown. This really means that when you start out trading, 80% of all traders will ultimately give all of their trading capital away. Okay, so if there were, let's say, 100 people in attendance today, and we almost have that many people here this morning, 80 of them would eventually give all of their trading capital away and either be out of the markets entirely, or they would have to save up some more money before they were able to trade. Now, this means that 15% of all traders would just break even. All right, that's okay. I mean, we've had some really strong gyrations in the market, and 15%, or if we had 100 people here today, 15 of you would be basically breaking even. You wouldn't have lost any money. But, you know, for all of your hard work, all of your studying, the money you've spent, you're basically just treading water. You have nothing to show for it. So ultimately, this means that only 5%, we have 100 people attending today, only 5 of you would be consistently profitable, okay? A pretty small number. In fact, if you want to see what that looks like on a pie chart, here's the way it would look. We have basically this large red portion would represent the percentage of all traders that would be losers, that would give everything away. This blue slice here would represent the 50% of traders that just break even, and the small little sliver right here in green represents the percentage of traders that are profitable. Now, I've often said this in my presentations, and I truly believe this. The markets are like a big pie in the sky. There's enough for everyone to go around. You don't have to come and approach the markets with this mindset like as if you're competing against someone, that for every trader there's a loser. Sure, you can say that and you can think that, and that is in all actuality what's happening. But why even think of it that way? That would be similar, I've said this before, to thinking that for every breath you inhale, someone is exhaling, and vice versa. You know, there's enough oxygen to go around for everyone. So why even come to that conclusion, or why even have a mindset? It's the same way with trading. Why even think that you're competing against anyone or against anything? There is enough for everyone to go around. But we have to ask ourselves, if there's enough for everyone to go around, if there's just a never-ending source of profits for someone to take, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? In other words, if they're just out there waiting to be captured, why is it that just a small amount of traders are able to consistently capture gains out of the market? Well, it's really not that difficult. After been trading for 4 decades now, it really is rather simple. And here's the one thing that these traders have in common. These traders are consistently on the right side of the market. In other words, they know whether they should be bullish or bearish, and they're in sync with the market. The way you do this is by listening to the market or learning how to listen to the market. Trouble is, as traders, myself included, we're not taught how to do that. The first thing we're taught is to listen to what some convoluted indicator is telling us, or to listen to what the earnings are, or to listen to what the economic numbers are going to be announced this Friday, or to listen to some guy in a chat room, or to listen to some guy on TV, but we're never listening to the thing in front of us, which is the chart we're trading. Well, here's the beauty of what we teach at Pro Trader Strategies and Specialist Trading. We teach you how to listen to the market. We have a platform now that teaches you how to do that. I'm going to show you examples of just how simple it is to listen to the market and then decide whether you should be bullish or bearish. This means whether you want to look at the markets as a whole, if you want to look at a specific stock, you want to look at a specific time frame, you'll be able to know in a matter of moments whether you should be bullish or bearish. So this promises to be a great educational presentation today. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my webinars, we are all about educating you. We are a little bit different from other presenters and webinars, and the fact that we're not, here to force feed you with signals and tell you what the perfect market is, and we've got the greatest system that generates thousands of percent going back 10 years. We don't believe in that. There's so many vendors and presenters that do that, and if this were true, if these things actually work, then the majority of traders, 80% of all traders, would be successful, right? But trust me, I've been trading for 40 years, and for 40 years I've heard things about the perfect system, the perfect method, the perfect market, and the statistics are still the same. 80% of all traders fail. It's because we haven't learned how to listen to the market. I was lucky enough when I was struggling 4 decades ago to have mentors who taught me how to listen to the market. And this is what I do with all of our students around the world in over 110 countries and virtually every state. We teach you how to listen to the market. I've traded straight up markets, straight down markets, the crash of 1987, the bull market that followed. So I know what works in terms of consistency, and I know what doesn't. So this is what we do at Specialist Trading. We provide all of our members with the tools, the techniques, the strategies I've accumulated. So hopefully we can enhance your trading and have you trading as a consistent trader and get you into that 5 percentile group. I'm going to show you a lot of examples today on how to do this, and I'm going to break precedents here. I've done this only once before. We're actually going to look at some live charts, and you're going to be able to participate and look at the stocks that you're interested in, the markets you're interested in, to see if we're actually in a bull market or a bear market, or whether you should be bullish or bearish. But before we begin, as always, we are first required to show you this. So please take a moment to view our disclaimer. We're required by law to show you this. I'm going to show you a lot of performance results teaching you how to listen to the market, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. So as you're taking a brief view at our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there if you haven't done so already. We have lots of people following us on a daily basis. I post anything from little financial bits of wisdom that I've accumulated along the way to actual signals that our strategies have generated using the same concepts and philosophies that I'm going to be sharing with you today. So feel free to follow us on Twitter. Now, as I stated, we're a little bit different from other webinars or other presenters in the fact that our sole purpose is to teach you. We are first and foremost an educational company. This means we're not in any way telling you how to trade. We're simply providing you with the tools and mentoring you so that you can make your own decisions. All of our strategies, all of our courses come with different entry points, different exit points, different stop placement, and then you decide. All of these are fine. They're all consistent. But the main point that we stress is that the only way one becomes consistent is by making your own trading decisions. We shouldn't have to do that for you. We're not a signal service. We don't tell you to come to our website and we'll tell you what to buy or sell the next day. Now, sure, we provide these things for you, but only for educational purposes so that you know what to look for. Ultimately, you have to make your own decisions. These are the same things that were taught to me 4 decades ago, because when my mentors were teaching me, I wanted to just piggyback all of their trades. I remember them teaching me the same things, and I said, why can't I just buy or sell the same stuff you're doing? If you guys are so consistent, why can't I just piggyback off what you're doing? And they said, because you wouldn't learn. And let's say our strategies or our concepts are the same, but our personalities are different. Let's say I want 20 trades a day and you only want 1, or vice versa. You're not going to be able to implement the strategy correctly because you're going to be out of sync with your persona. So that's why we preach that no 2 traders should ever trade alike. We do not trade, nor do we teach systematic trading, because that requires everyone to trade the same way. That's how they come up with the numbers and the statistics and the win-loss ratios. We don't believe in that. I've taught and traded systems, and guess what? Each and every one of them has eventually blown up because the market conditions change. So you have to be a part of the process. You have to be a part of the decisions. And the only way to do this is by deciding how and what you want to trade, and then, being in charge and making your own decision and becoming a part of the process. So this is what we encourage. We encourage that no two traders should ever trade alike. We want you to trade differently, okay? This is our goal, not to force feed you signals, not to tell you how to trade, but to teach you how to trade with the specialist edge, okay? Now, since this is going to be a classroom, I want to take all your questions, but since I have a lot of slides to share with you today, please wait till the very end to ask any questions. That way we'll get you out of here at a reasonable time, and you'll have the rest of your afternoon to enjoy the Saturday so you can relax and go over possibly some of the things I'm going to be teaching you today. If we do have questions, we'll reserve the last 15 minutes. The only question I will answer at this point is the most popular one. Is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical difficulties, many times if you log off and then log back on again, the problems will be corrected. Oftentimes it's your internet connection. But if you're still having difficulty seeing or hearing me, don't worry. We will provide each and every one of you with a link to this recording, okay, afterwards. Okay, so once again, we have a really good crowd here today. If you happen to join us later, please wait till the end to ask any questions. All right, so let's begin. What if there were a tool that was automatically designed to put you on the right side of the market? Wouldn't that be cool? Wouldn't that be great if just right off the bat, whether you're an intraday trader, whether you're an investor, whether you trade Bitcoin, whether you trade currency pairs, what if you could automatically be put on the right side of the market? That would be amazing. Well, in all actuality, there is. It's called the buy-sell line. This is at the core of all of our methods, all of our strategies. It is so simple to apply, but extremely powerful. And all it is the 50-period simple moving average. Remember, I've told you that in order to be a consistent trader, you don't have to overcomplicate your trading. In fact, the consistent traders, the ones who have been trading not just for a couple of years or 5 years and have a perfect system, but the ones who have been trading 20, 30, 40 years down the road, they have the simplest of plans, the simplest of indicators. And so wouldn't it be logical to assume that those are the things that work? Well, I've been using the 50-period simple moving average for 40 years now to help me to determine whether I should be buying or selling. But in order to use it properly, you have to ask yourself a question before you trade. And I don't care if you're trading one of my strategies. I don't care if it's from another webinar that you got. I don't care if it's someone you pay $10,000 for, their perfect system. It's okay. But you have to ask yourself before you pull the trigger this question. Where is price in relation to the buy-sell line? Okay, I'm going to say that again. In fact, if I were you and you're just learning, I would write this down, put it on a Post-it, and have it on your computer screen to make sure that you ask yourself each and every time before you pull the trigger, before you actually buy or sell, ask yourself, where is price in relation to the buy-sell line? This is extremely important because you'll only come up with two possible scenarios. If price is above, then you'll only be looking to buy. If price is below, you'll only be looking to sell. So in other words, if you're looking to buy, doesn't that mean you're bullish? And if you're looking to sell, doesn't that mean you're bearish? Okay? This is how you automatically know whether you should be bullish or bearish, where price is in relation to the buy-sell line. So let's look at this older chart here of the spiders before the market started to sell off. Someone looking at this would obviously say, boy, how did I know this was going to go up? Well, you could have if you had simply applied the buy-sell line. And if we look back here as early as March 2016, all right, 2 years ago, you knew on a weekly time frame that you should have been bullish because we had consecutive bars closing above the 50-period moving average line. So there's no reason to play the victim game and say, boy, I missed that entire rally because, how was I supposed to know the market was going to go up? Well, you did know. If you had, maybe taken this webinar before and learned all these simple tools, you would have known, yeah, I should be bullish. Now, conversely, if we ask ourselves, where is price in relation to the buy-sell line, we can also look at this chart in IBM. IBM, this is the way most investors invest or most traders trade. They'll go to a chat room, or they'll look at some fundamental news, or they'll look at some convoluted indicator, some overbought, oversold indicator, and say, boy, look at this big gap down here. We've been going lower, and this is an exhaustion gap, and we're trying to hold. So I'm going to buy right here. I mean, we've been tremendously oversold in IBM. We've got to bounce, right? And then look what happens. Goes even lower. Now at this point, it looks as if we're firming up. In fact, you could even say that, well, possibly we're making some support. So you start to do some research. Maybe you take this course, this $5,000 course that teaches you about what the institutions are doing, and you say, wow, the institutions are all buying right here. That's why we haven't been going down anymore. So if they're a buyer, I want to be a buyer, right? This is some major support here. So obviously the institutions can't be wrong, so you've got to do what they do. So you buy some more. And you don't need it to go up that much in order to break even. So you really double up, maybe you triple up, and then look what happens, okay? This is the way 99.9% of all traders trade, myself included. When I first started out, I thought, well, you know, you're supposed to buy low and sell high, right? So these things are so oversold, you got to buy it. But what was the one thing I didn't do? I didn't listen to the market. And what was the market telling me? Well, it was telling me that price is below the 50-period moving average. Remember, always ask yourself, where is price in relation to the buy-sell line or the 50-period moving average? Now, I knew, now that I looked at this later, that price was below, we had consecutive closings below well in advance of that large sell-off. So why would I ever listen to anyone or anything else tell me to buy when the market, the source of what I'm trading, is telling me it wants to go lower, you know? Why would I do that? Why would I swim upstream and cause all this pain and sleepless nights and loss of money when I could be in sync with it? So obviously the market was telling me here I should be bearish. Let's look at another example here, CREE. Now this one's a little bit tougher to define because we're kind of going sideways. And this is where people say, well, Steve, you can't tell if you're bullish or bearish in a rangy sideways market. Well, sometimes you can. If we add the 50-period moving average, we see here for the beginning portion of this chart, we were below. So that means we were bearish, meaning that we don't have to sell short, we don't have to buy puts. It just means that from this point, we're just going to look at this market from either on the sidelines, we're not going to participate, or we're going to look for sell setups, all right? But then look what happened here. We started oscillating above and below the 50-period moving average. This is the market. Not some guy in a chat room, but the market giving us clues that it may be wanting to change its mind. It may be wanting to go from a bearish bias to a bullish bias. So how do we know? Well, here's the rule of thumb. Look for at least 3 to 5 bars to close, either above or below the buy-sell line before an overall trend is established. Now, is this a steadfast rule? It's written in stone? No. Everything is subject to change, but this is how you become part of the process. It's up to you to decide. There is nothing here that works 100% of the time, okay? So don't think that this is a system. We don't teach nor do we trade systematic behavior because the market is always fluid, it's always changing. So we just want to put the odds in our favor. So this is a rule of thumb. So if we look at this now, we were bearish, and now we start to hug the 50-period moving average. And what do we have here? We have 1, 2, 3, 4, 5 closes above. So don't you think the market is giving us a clue that, well, maybe it wants to change its mind. Maybe it wants to go higher, okay? So at this point, the market is not telling you to buy the market, but it's telling you you shouldn't sell. I don't care what some guy says about the earnings or some guy says about the market. This is telling you it may want to go higher. So look what happened in the weeks to follow, okay? Not because we were following the news or the economic reports, not because we were looking at the institutions, but because the market told us what it wanted to do. If we look at UA here, once again, this is the way most traders trade. Every time we had a little bounce, that's where they jump in thinking a bottom is made. Then we go lower, and then we bounce again, so we buy some more. We think a bottom is made. Then we go lower, and we just go lower and lower. If you add the 50-period moving average, you would have known if someone asked you what they thought about this stock in July of 2017, almost a year ago, you would have said, I'm bearish on Under Armour. And they would have said, well, why? He said, because it's below its 50-period moving average. It's below the buy-sell line. That's all you need to know. Now, remember, this is not a system. It's not a strategy. It does not tell you where to enter. It does not tell you where to place your stop. It does not tell you where to exit. This is just a tool for getting you on the right side so that you can say whether you should be bearish or bullish. That's all. But that's half the battle because most of the time traders are buying when they should be bearish, as we see right here, or they're selling when they should be bullish. That's why 80% of all traders fail. Let's look at another example here just to show you that this is all about consistency. Nothing is 100% foolproof. So I don't want you to think that this is systematic in any way. It's just a tool that helps you get in sync. It's consistent. As we see here in MRK and Merck, we were originally above the buy-sell line right here. So this was telling us we had a total of 5 closes above, and then the market did go up. But nothing was really sustained. Remember, we're not going to simply buy at the market. This is just telling us we should be bullish. And so for a while, it looked very good, but then we started to sell off. Now we're still above the 50-period moving average, so we should still be bullish. Perhaps this should be a buy opportunity. Maybe your strategy or your system gave you a buy signal. That's okay. You're in sync with the overall trend, so it's okay to take it. But at this point, we started to waver a little bit. We couldn't really have enough gas to get us higher. And what did the market tell us? Well, we started to oscillate above and below this 50-period moving average. Whenever you see price oscillating above and below for an extended period of time, that's the market telling you it's indecisive. It doesn't know what it wants to do yet. But oftentimes, that's in the face of a big trend change. Not guaranteed, but oftentimes. And for example, what did we have here? We had a total of 9 closes below that 50-period moving average. So if you were long originally off of, say, some setup you had maybe here or here, you should take your loss and either be on the sidelines, or if you're more aggressive, look for a shorting opportunity, because the market is giving you a clear sign that it has a negative bias. It hasn't really shown anything yet, but with 9 closes below the 50-period moving average, below the buy-sell line, that's a very strong clue. That's a very strong message, not coming from someone else, but coming from the market, that it wants to go lower. You see, you don't have to overcomplicate your trading in order to be on the right side. And you can see Merck fell 8 points in the next week, okay? Now, I know a lot of you are saying, well, okay, Steve, but I'm sure you just kind of picked examples that, make your point, but how important really is this, okay? I mean, I can't imagine making my decisions based off of just the 50-period moving average. Okay, I can understand that. I had the same doubts myself when my mentors taught me this 41 years ago. I couldn't believe it. I thought this is just too simple. I thought we have to have a ton of indicators. I thought I have to look at the higher time frame to find out what the lower time frame is doing to get them in sync. Or I thought I had to listen to the institutions, or I at least thought I had to know what the earnings were going to be, or the economic indicators to tell whether I should be bullish or bearish. And my mentor said, no, we don't look at that stuff, so why should you? And I thought, wow, you guys have been trading for 40 years, 50 years, you don't look at that stuff? And they said, no. And guess what? The minute I stopped looking at that, my trading started to become consistent. I haven't looked at the news. I haven't looked at fundamental reports or earnings or economic reports in 40 years, and I'm still here. So if, I'm not saying you have to trade that way, because once again, that's not our mission. But if you feel you have to, it's not required from what we teach at Specialist Trading. So let me show you how important this buy-sell line really is. Here's a chart of the Dow on our PTS Primo Charting Platform, okay? We've had a really nice run up, and then we've had some sell-offs, and we're starting to oscillate, and it looks as if we're maybe making a base right here before we have another run up, but how do we know for sure, all right? This is the Dow, as we can see here. Here's the only trouble. This is not a current chart of the Dow. This is from going back to 1987, okay? This is when I was on the floor, trading on the floor. I was a specialist. I made markets in about 60 stocks. I was trading on the floor while this was happening. Now, if we simply applied the buy-sell line, let me show you how simple it is on our platform. All you have to do is click on our buy-sell line tab right here, and it automatically appears at 50-period moving average. Now look what the market was doing. It was well above its 50-period moving average for a while, and then it started to oscillate above and below. Now, is this telling you should be bearish? No, it's simply giving you a clue that the market is in an indecision pattern, that you should take that to note, and that maybe, possibly, it's getting ready to change directions, okay? So, as we see here, we closed below, but then we closed below a little more, went back up again, and then closed below some more. So this is the market giving you some clues, some information that it's very indecisive. When I've seen in the past, when the market is indecisive, oftentimes, not guaranteed, but oftentimes that is the sign of a trend change. Okay, So if the market is thinking about changing its trend, at the very least, you should, if you're long already, tighten your stops or maybe get out of positions altogether. It's entirely up to you. Remember, you're in charge of your own trading, not us. We're not a financial advisor. We're just an educator trying to supply you with information to help you make your own decisions. So we all know what happened after that. The crash of '87 would have been comparable to a one-day market drop of 4,000 points in one day, okay? And we had a really strong down markets this last week. Imagine we were down 4,000 points in one day, what the conditions would have been like. Well, that's the way it was during the crash of 1987 when I traded down there. Let's look at another chart. Here's the spiders. Here's a weekly chart of the spiders, okay? Same thing, we're doing very well, and now we're starting to oscillate. Here's the only difference, though. This is a weekly chart of the spiders going back to January of 2008. Remember what happened in January 2008? That was the last great market fall we had. That was the last great bear market, the beginning of a great bear market. And a lot of people were caught because we had been going up for the last year or two straight up, and people were making tons of money. There was just money flowing around in the markets, money to spare. People, so many companies were doing well, and things were going fantastic. And then everyone got caught off guard by the financial crisis. Was the market giving us a clue? Well, let's look at this weekly chart of the spiders. The spiders are the ETF that represents the S&P 500. Now, once again, we were well above the 50-period moving average, but right here we started to oscillate. 3 closes below, then we close back above, and then we close back below again. So the market, once again, is giving me a clue that it may want to change trends and be bearish. At the very least, I'm going to move my stops up to protect myself in case something does happen. If I'm not in the market, maybe I want to stay on the sidelines for a bit. I don't care what some guy's saying or the master chat room where you should buy the stocks that this guy says. Don't do anything. Listen to the market. And the market's telling you it's a little indecisive right now. And look what happened after that. We all know the beginning of the 2008 financial crisis. Lasted about 2 or 3 years, okay? Don't you think this could have helped you at all? Remember, this is not a strategy. It's not telling you to short at the market. It's not telling you where to sell, where to place your stop. This is just designed to get you on the right side. Remember, 80% of all traders fail mainly because they're on the wrong side. If you're on the right side, that's half the battle. You'll be in sync with the overall trend. And it's as simple as applying a 50-period moving average. Now, if you don't believe this, go back and research your last 10 to 20 trades, okay? It doesn't matter if you intraday trade futures. I don't care if you trade Bitcoin. I don't care if you trade commodities or if you're an investor in the stock market. Go back and look at your last 10 to 20 trades. Doesn't matter what market, what time frame. Apply the 50-period moving average. Okay, I can almost guarantee you that the losses you had were due to the fact that you were out of sync with the buy-sell line. Trust me, I know this from firsthand experience because this is the way I used to trade. So I can almost guarantee you that's why you lost money. So this tool will help you tremendously. Now here's what most of our students do once they come on board, become a student of mine at Specialist Trading. What they'll do is they'll see this and their eyes will light up and go, boy, this is amazing. Wow, you know, I can't believe I'm doing so well. Now, Steve, this is great. And they'll apply it. But then they'll attend a webinar. They'll hear something on TV about some great class that makes you tons of money. And then it'll all go out the window. And they fail to continue using it, or they just forget about it all entirely. So we've done things with our new platform to make it simple for you so that it's right there in front of you. With a simple click of an option we have on our platform, you'll be able to know automatically whether you should be bullish or bearish, and you'll know the intensity of that market at the same time. This is our new fluid feature that we have on our new PTS Primo Charting Platform. Now, the beauty of the fluid buy-sell line is that it not only tells you the overall direction, whether you should be bullish or bearish, but it also tells you the momentum of the market you're trading as well. Here's how to apply it. All right. On our platform, you can see here we have an older chart of GE. As you can see, it's been going down for a long time. Someone, once again, playing the victim, would say, gosh, Steve, my broker had me buying this all the way down. Now I'm in this for the long term. I can't believe I'm invested in this thing. Well, if you'd simply clicked on the buy-sell line and done your own work, you click on 50-period moving average, or what we're suggesting is click on the fluid feature. That will automatically change the background of your screen from reddish orange to bluish, light bluish view. Now, what does this mean? Well, this is simply our 50-period simple moving average line. But if you're in the reddish orange area of your chart, if price is, it's like the old sailor's adage. But we've changed it. Red sky at morning, trader take warning. That means you shouldn't be long anything. You should be either short or out of the market. And if price is consecutively above in the blue zone, well then blue sky at night, trader's delight. That means you should be looking for buy setups. Now here's the other added feature. Because of this color-coded background, now you see the intensity or the momentum by the slope of the difference of the two colors. When you have this strong downward slope, almost a 45-degree angle, that's when the most highly consistent setups occur, okay? So right here, starting with this downward slope, you could have taken advantage of shorting and you had some very nice movement to the downside. Now, what about the opposite? Okay, well, let's look at HPQ, all right? How could we have known to be bullish here? Well, we click on the buy-sell line, the fluid feature, and automatically the colors appear. Blue sky at night, trader's delight. Red sky at morning, trader take warning. And we see here that we originally were below. So this was telling us not to be involved in this market or to look for shorting setups. But right here, we have 3 to 5 consecutive closes above. We're in the blue zone, so now we know that we should be looking at the market from a bullish point of view. You see how you automatically know whether you should be bullish or bearish. And then at this point, we started to really ramp up the slope of the 50-period moving average. So this is where the high probability setups would have occurred in any strategy or any system you're trading. So this is what you're looking for. You're looking for this strong upward slope to go long. You're looking for a strong downward slope to go short. Whether you purchase puts, options, the actual stock makes no difference. But that's the sweet zone right there on that strong slope. That's what you should be looking for. Let's go back and look at that weekly chart of the spiders. Okay, remember you simply click on the buy-sell line, click on fluid, and in seconds you'll see the change. Now we had a strong upward slope, but now we started to level off and kind of go sideways here. So that's telling us that the market has run out of gas. Doesn't mean that we're bearish yet, it just means we're running out of gas. But now we have this inconsistency. We're closing below, above, below, above. So this was a great warning coming from the market. The buy-sell line is flattening out and we're closing above and below. And that was the beginning of the 2-year bear market, okay? And now you see that once we started to go much lower, look at the slope. And this is where those strong shorting opportunities continued. Now, you could have been out of the market entirely. Most of our students were out of the market altogether. And you either were looking to go short or you went into something else, or you were, basically on the sidelines waiting for price to be above the 50, which happened later on, I believe, in 2009, 2010. Okay, now, here's our disclaimer one last time because I'm going to do something. I'm going to give you a chance to participate. I'm going to open up our PTS Primo Charting Platform so that you can actually look at stocks that you're interested in. Just simply go to your question and answer box. Let me know what stock you're interested in, and I'll show you this simple concept. But please remember, I'm going to show you a lot of performance results using our fluid buy-sell line, but we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So all the examples I'm going to be sharing with you today on these live charts are strictly for educational purposes only. So think of whatever stock you're interested in. Maybe you are actually in something right now, and let's look at it. Here is a chart of our on our live PTS Primo Charting Platform of the Dow. Okay, as we can see here, this was December coming into January, and look at the rate of the slope of the 50-period moving average. Okay, so everything's fine here, and then we even had a strong sell-off. This was in February, just last month. And we had consecutive closes. So this was telling us that most likely we're in a bearish market, or we should be bearish. But we had a really nice bounce up mid-February coming into March. We had 1, 2 closes above, 4 closes below, 3 closes above, more consecutive closes below. So what is this telling us? It was telling us that, as I stated before, when we oscillate above and below, that's indecision. So where a lot of people were saying, this is just simply a correction, Steve. You gotta buy this, okay? Well, it all depends on what time frame you're looking at. On a daily time frame, such as this, well, this was indecision, but this is not something you want to participate in because we haven't had a lot of consecutive closes above. And then look what happened this last week, okay? So it's really not that hard to define. Now, this is if you're looking at daily charts and you're just a short-term trader, you hold positions for a week or two. Let's say you're a swing trader where you like to hold positions for maybe a couple of weeks to a couple, 3 or 4 months. Well, all you would do is simply come up and click on weekly charts, okay? Now with the weekly charts, where is price in relation to the buy-sell line? Price is still above, so should you be bearish? No, you're still bullish. Obviously we're coming lower, but until you get consecutive closes below that buy-sell line, and the buy-sell line is still sloping upward, on a medium to interterm long range investor, you're still bullish this market. This has not shown you any signs of being in a bearish mode. Now we can still go out further. Let's say you're an investor. You hold positions for months, for years, for decades, okay? We look at the monthly charts. Is there any reason you should be bearish if you're a long-term investor? Absolutely not. So you see, what's really important here more than anything else is to know what time frame you trade. If you're simply an investor who likes to hold positions 10, 20 years, there's nothing to worry about now. Sure, this may be a sell-off, it may hurt for a while, but you're not interested in looking on a day-to-day basis. If you're a trader that trades on a day-to-day basis, well, we are definitely in a bearish market. So the point is, what matters is what time frame you're looking at, because everything changes the minute the time frame changes. So that's a daily chart, okay? Now I'm going to give you an opportunity to actually look at any stock that you may be interested in. Let's see, people are interested in the spiders. Okay, so let me punch up the spiders here. The spiders are not as clear as the Dow. And excuse that little bell that goes off, but that just tells me that the time that the market has changed. But it's the same thing here. We have this indecision. The indecision is more pronounced. We're up above, we're down below, we're up above, and then we're down below. So at the very least, because of that indecision, oscillating back and forth, you should not be involved in the market, or you should be tightening up your stops. Now we've come back to almost test these lows here. Are we going to be going lower? Well, the buy-sell line is not a predictive tool. It does not tell you how high or how low something will go. It's simply designed to put you on the right side. Okay, that's all it's designed to do. So right now, in this last period from February to mid-March here, we were in an indecisive mode. Look at the slope here. The slope was extremely strong in the spiders. And then look, after that strong sell-off in February, we started to flatten out. It's still going higher, but still flattening out. And then coupled with the indecision above, below, these are all clear warning signs coming from the market. So no longer do you have to go, boy, I don't know what to do. I better go to that chat room and find out what everyone else is doing. Or, geez, I subscribe to this signal service. They'll tell me what to buy and sell. Or, boy, I got to turn on TV and listen to what these guys, the pundits, are saying because they know what they're doing, right? Okay, this is similar, in my opinion, to going to a bar and saying, hey, who do you guys like in the fifth, all right? It's that silly. You should never ask anyone or anybody what they think of the market. You should know just by applying the 50-period moving average what the market is telling you. So when people asked me the other night at this function, Steve, what do you think? Is the market bullish or bearish? I said, well, we have to ask the market. You don't ask me, ask the market. And they said, what do you mean ask the market? I said, well, the market tells you everything it wants to do. So ask it, where is it in relation to the buy-sell line? And they said, what is the buy-sell line? So that's what gave me the idea for this particular presentation. Now, it's extremely simple. Doesn't cost you anything in terms of you can apply the 50-period moving average on any platform, any charting platform, any free charting service over the internet. But we really think it really adds to its power and its simplicity by being able to have these other features such as the fluid, okay? Now, if we want to look at a different time frame, let's just look at the weekly time frame for the spiders. Once again, the spiders, if you are an intermediate type of trader, you hold positions for a couple of months to maybe a year or so, everything is still fine. Sure, this may not feel very good right now, your investments or your trading, but that's okay. It didn't feel very good back here in August to October of 2016, but then look what happened. So it all depends on what type of trader you are. And remember, this is a decision you have to make. I can't tell you what type of trader you are. That's your own persona. All right, when I first started trading, I was an intraday trader. I was the type of trader who traded 1-minute charts, and I traded maybe 200, 300 times a day. Now, because of my schedule and teaching and webinars, I mean, I'm lucky if I trade maybe once a day. But that's okay because I've changed who I am. So there's no way I can ask you to trade like me, and there's no way you should. You should trade what makes you feel comfortable. So if you like to trade weekly bars, if you like to trade monthly bars, or if you like to trade tick charts, there's no one wrong or right answer. The right answer is what makes you feel comfortable. It's what you're in sync with your own trading style, okay? And we're mainly looking at daily bars here just as a reference, but you can apply this to anything, and I want you to go out and do the due diligence and to do the work, all right? Let's look at a couple more here that people are asking about. Letter F, okay, people are asking about Ford. Simply type that in here. And as we can see, Ford, as far back as mid-January, was telling us, get out of the market. Now right here, it oscillated above and below, but then it firmed back up, okay? But I assume there was some bad news here, or this gap down, or whatever happened. Remember, I don't follow the news or look at it, but I assume it was some negative report. We had 1, 2, 3, 5 closes here, roughly around $12. You could have gotten out if you were long, or if someone was saying, oh my goodness, did you see this large gap down on Ford? We got to buy it here. All the indicators are so oversold, and the institutions, I hear all the major houses are buying this because it's so low now. It's at major support line, where it was before back in November. So we've got to pick up some stock, all right? This is the way most traders make their decisions based off what somebody else or something else is doing. But what is the market telling you? Well, we've got consecutive closes below the 50. So you don't want to be in this stock. Doesn't mean you have to short it, just means you don't want to be in it. And now, coming into February, look at the slope of the 50-period moving average. This is where you get these nice high probability selling opportunities. You see right here how we just came right up to it and then turned around. You'll see this oftentimes a lot when you have these strong downward sloping moves. Now, same thing with these strong upward sloping moves. You have a strong upward, came right down, touched it, and then went back up again. So what is the market? Not some analyst on TV. What's the market telling you about Ford? Should you be bullish or bearish? You should be bearish, right? You shouldn't be in this stock. I don't care what anyone tells you. Don't buy this stock until it has consecutive closes above the 50. But remember, just because it has consecutive closes above the 50 does not mean you buy at the market. This is not a strategy. It's simply a great, simple, powerful tool to get you on the right side of the market. Now, let's say you were an investor. All right. Well, same thing. You shouldn't be in this stock. On a weekly time frame, it's below its 50. If you're a long-term investor, it's been below its 50 for a long time. So you have every time frame, major time frame, in sync with each other. Now, we don't require that. If you want to, you can, but we don't require you to have the different time frames in sync. But isn't the market telling you that you shouldn't be in this stock? All right. I mean, you've got the monthly, the weekly, and the daily all below their 50-period moving average. Isn't the market trying to tell you something? This is not something you should be investing in or buying. All right, let's open it up to some more here. Excuse me, it takes me a while to open up your question and answer. Win. Okay, let's look at WYNN. I know there was news out. There's been news out about that company. Well, on a daily time frame, this is still bullish. Now, we did have some bearish activity here in February. We were oscillating above and below. This strong upward slope started to go sideways, but guess what? We have 1, 2, 3, 4, 5 closes above telling us that we should be bullish this. Now, if your strategy generates a buy signal, that's great. Go ahead and take it. You will have the odds in your favor. But if you get consecutive closes below this buy-sell line, you should be out of this market, okay? So this is bullish. This is a little bit different. This is where someone would say, but, gosh, the market is so terrible, you shouldn't buy anything. Well, maybe this is going to be going up because the market, the actual stock is telling you it's okay. Now, if we look at a weekly time frame, everything's fine. In fact, the slope is still going higher. So this could help you make your decision whether you want to buy. Now, we're not recommending this. We don't have a strategy buy signal, but we're not talking about signals today. We're just talking about what side of the market you should be on, okay? Let me open up another one for you. And remember, this works, I'm just basically focusing on stock data today because we have the stock data charts up here. This can work on, as I stated, I intraday trade. I use this on 5-minute charts of the E-mini. So if you're an intraday trader, it makes no difference. I don't want you to get fixated and think, well, this only works for stocks and this only works for daily bars. No, I very rarely use this because I don't trade daily bars. I mainly trade 5-10-minute bars myself. So, you know, and I use the same exact rules, the same things, okay? Let's see, UUP. Okay, someone is asking about UUP. We'll check that out. I haven't heard of that, but we'll see what it is. Well, this has definitely been negative. Okay, it's been negative since right here. We had consecutive closes. As you can see, we had 1, 2, 3, 4. Now, this was telling you, well, maybe we're changing. But remember, this is why we say this is not a strategy, because it doesn't tell you to buy just because we close above, because then look what happened later on. It's just telling you to be wary of maybe being short. After all, the buy-sell line was still going up. Now, at this point, the buy-sell line started to flatten out, and now you have consecutive closes. So this is roughly about 24. And don't you think you would have liked to have known that? Look at all this you would have missed. Now, the buy-sell line is still strongly pointed downward. We're starting to have some little action above, but then it goes quickly below. So I would not just jump in and say, hey, well, this is getting ready to be bullish. I would, you know, be weary of this. It still has a negative bias because of the slope, and the majority of the bars are still closing below. So until you see consecutive closes above and that buy-sell line starts to flatten out, I would still not be doing anything, but that's just my opinion. It's up to you. You're in charge. You make your own decisions. The buy-sell line at this time is simply telling you that this is in a bearish mode, okay? It's UUP. If you want to look at a different, let's go to a weekly chart. The weekly chart is definitely bearish. It's been bearish since the May of 2017, right here at roughly the same price, 24. So this is well below its 50-period moving average. All right, let me open up and get some more questions here. Let's see. BA, Boeing. Okay, let's see. Boeing and Merck. Let's look at Boeing first. Well, Boeing has been very strongly bullish up until even in February, when the market really had these strong declines. Look at the stock, it went up until this last week. Now, this to me is telling me that I should be out of the stock. Doesn't mean I'm going to short it, just means that I shouldn't be buying this, okay? This is on a daily time frame. Now, if I were an investor or more of an intermediate time trader, we'd go to a weekly chart, everything's still fine. So it all, once again, depends on what time frame you're looking at. So on a weekly time frame, we have a very strong upward slope. So the market is bullish according to the buy-sell line. On a daily time frame, you should be out of this stock according to the buy-sell line. Why? Because it has consecutive closes below the 50-period moving average. So if you're long, at the very least, move your stops or maybe sell a little bit. It's up to you. You're in charge of your trading, not us. But the 50-period simple moving average is telling you that we are in a bearish mode in Boeing. Okay. Now let's go to Merck. Someone asked about Merck, MRK. Well, MRK has been below its 50 period since the beginning of February, and it continues to be there. It doesn't look like it's getting closer, and we're starting to see this downward slope increase in momentum on the 50-period moving average. So this, according to the buy-sell line, is telling you to be bearish. Okay. We want to go to a higher time frame. Yes, this has been bearish for a while. You see how we came right back up here, bounced right back up to the buy-sell line, and then quickly went lower. You'll see that phenomenon happen a lot, and that was on a weekly time frame. So you have the weekly and the daily saying that you should be bearish in Merck. And now let's go to the monthly, and now the monthly has consecutive closes below. So this once again has the three major time frames telling you that MRK is in a bearish mode according to the buy-sell line. How you decide to trade is entirely up to you. We'll have just a few more minutes for a few more. Let me open up the answer box again. Some people are asking for commodities, crude oil. I can't get those because that's on a different data, but we have that data, but I would have to close this and open up another platform with a different data source. And then when I wanted to go back to stocks, I'd have to close that and go back. So I don't want to do that right now. I apologize. Let me just take a few more here. People are asking about Netflix. People are also asking about Apple and AMD. Okay, let's look at Netflix real here. We'll just look at the daily charts so we don't have to go through so many. Netflix on a daily time frame is still doing fine, okay? There's no reason to worry about that because these are daily charts and it's still okay. So in other words, the buy-sell line is telling you if you're long, well, sure, you're experiencing a sell-off now, but you still should be looking at this from a bullish point of view. The buy-sell line, not us, we're not in any way financial advisors, but the buy-sell line is telling you not to worry, we're still bullish, okay? Now, if you want to look at Apple, Apple just crossed over its buy-sell line on Friday and has now had 3 consecutive closes below. Look at the slope of the buy-sell line. It's pretty flat, okay? So once again, your decision, but the buy-sell line is telling you that we're now in a bearish mode. We were bullish coming into this past week, but we're now in a bearish mode, and it's telling you that the slope is pretty much flat and it's not increasing in momentum to the upside. So you may want to be bearish according to the buy-sell line, okay? Let's see, did we look at AMD? Some people were asking about that. And AMD has been below for the last couple of weeks below its 50-period moving average line. So the buy-sell line is saying it's bearish. Okay, you see how simple this is? I mean, you could have known well in advance right here or right here to not be involved in this, and you would have saved yourself all this downward movement. And let's say we're not telling you, we're not advising, and we're not predicting, but let's look back at Apple again. If, oops, one more, excuse me, let me get the symbols correctly here. We don't know how far Apple may go. It may go all the way down to these old lows, or it may go back higher. But at this point, the market is telling you that you should not be bullish on Apple. So let's say this is the beginning of a strong downward move, even though we don't know. Wouldn't you have liked to know at these points right here, roughly around the 166, 168 mode, that level that you shouldn't be in this stock anymore? In hindsight, you may look at this a month later and say, gosh, how did that buy-sell line know that? Well, this is the way the buy-sell line works. It's designed to get you on the right side of the market. People are asking about Facebook. Lots of news in Facebook lately. Okay, as we can see here, early February we were having consistent closes below the buy-sell line. We bounced back up, down below, back up. This is what we mean by indecision. Even though we had a lot of closes above here, there's a lot of indecision because we're bouncing back and forth. So this is why it pays to study this. And when you see that indecision, you may want to be out of the market entirely because the market doesn't know what it wants to do. So why should you be involved? You only want to be involved in the market when you have those strong either up or strong down slopes in the buy-sell line, and then you know whether you should be bullish or bearish according to the background. Now, before we close, let's look at one last one. A lot of people are asking about the QQQs. That's the ETF for the NASDAQ. As we can see here, same thing. Up until this past week, we were actually bullish. So you could have been long the QQQs, and you could see here that at this point, we have 2 consecutive closes below, and you may want to start to get bearish. It's up according to the buy-sell line. Let's look at the weekly chart. According to the weekly chart, the slope is still strong, and we're still okay if you're an intermediate investor. If we're a long-term investor, well, look at the slope and look at where we are in price. So it all depends. Remember, the importance of this is to first decide what type of trader investor are you. Do you trade 5-minute charts or you trade monthly bars? That's all that matters. And then you apply the fluid buy-sell line. And that will tell you what side of the market you should be on. Not us. We don't do that. That's not our job. We're not advisors. We're not telling you what our opinions are of the market. We don't have any opinions. We do the same thing. We just simply follow what the market is telling us. And right here, the market is telling us that it's okay. It's still in a bullish mode. Doesn't mean it can change, but at this point on a monthly time frame, it's okay. And on a daily time frame, you may want to start to be careful because we have 2 consecutive closes below, okay? Now we can use this. People are asking for different time frames. Let's go to a 60-minute chart. You see how the QQQs, if you like to intraday trade them, they were telling you on the 16th of March to get out of this market, okay? A full week in advance, we had consecutive closes below. And then look what happens, okay? Now we see the slope very strong to the downside. So do you see how simple this is? It doesn't matter if you trade 5-minute, 30-minute. Let's look at a 30-minute chart. Don't you think you could have used this trading a 30-minute chart? If we want to scroll back, we can go back even further. See how well this works? On a 30-minute chart, this is March the 7th. This was telling you it's okay to be bullish, but at this point, you should be bearish. Now, nothing much happened for the next 3 or 4 days, but look what happened. It finally kicked in, and here's that phenomenon again, where you come in touch, and then you go lower. And look at the slope of the fluid buy-sell line. This is a perfect example of how this works in any market and any time frame. All right, you can apply this to futures, you can apply this to currency pairs. It makes no difference. Now, we're not telling you where to buy here. We're not telling you, this is a strategy. This is simply a great tool to get you on the right side of the market. Don't you think this could have helped you this past 3 months, the first 3 months of the year with your trading? All you have to do is simply apply the fluid feature and punch up any stock, any time frame, any currency pair, any future you're interested in, even Bitcoin, and it will tell you whether you should be bullish or bearish according to the buy-sell line. This is the beauty of simplicity in trading. Now, if you'll bear with me now, I'm going to go back to the presentation. And remember, once again, our disclaimer is about showing you all of this, but please remember that we can in no way guarantee that any of the results I just shared with you will be repeated in the future. These examples that I just went over you were not to promote any signals, not to tell you what to do with the market, but they were strictly for educational purposes only. So, as we go forward here, please remember that the market, not some guy in a chat room, not some guy teaching in a webinar like yours truly, not some institution, not some brokerage firm, not some economic reporter earnings, and not some guy on TV, but the market is always telling you what it wants to do, whether you should be bullish or bearish. Your only job as a trader is to listen to it and then jump on board. That's it. Trading does not have to be more complicated than that. So let's recap before we go to question and answer portion. Remember, first thing you want to be doing with any market you trade, any style, any technique is apply the buy-sell line. That's the 50-period moving average. You can start doing that right now, regardless of what platform you have. If you have Metastock, if you have Thinkorswim, if you have TradeStation, makes no difference. They all have the capability to apply a 50-period moving average. If you really want to see it, the 50-period simple moving average in its real form, though, to really help you to get the most out of it, then you need to apply the fluid feature, which is only provided on a new PTS Primo Charting Platform, okay? Now ask yourself, do you think this edge could have helped your trading this past year? How about this past month, okay? If you've had trouble, if you've been struggling with the markets, do you think this could have helped you? Here's a great Saturday morning discount we have for all of you. We're going to offer you our PTS Primo Charting Platform, a great discount. This is the educational portal that teaches you how to listen to the market. We're giving you all of these things. Obviously, you're going to get our enhanced buy-sell line. This comes with 4 different features for viewing the 50-period simple moving average. I just shared with you our fluid feature, but we have background, we have a lower tab model, we have a lot of different ways to view the 50-period moving average. It also comes with our steps 1 and 2 entry points. These are specifically designed to fine-tune your entries. Automatically just click it on and it will furnish up and down arrows for entry points. It comes with the scanners. You can scan for these on a nightly basis. Over 90 technical indicators. You can tinker under the hood. If you're a fundamental trader, we have free Bloomberg TV, live TV on our media page where you can be watching fundamental news whenever it's announced, and then personalized tech support to help you with any issues that may come up, any technical issues with the platform. This is all provided, remember, for 30 days, we're going to introduce you to our PTS Primo Charting Platform for only $7. A great way to get acquainted with us, but more importantly, a great way to use that fluid feature, which is only offered on the platform. So here's how to take advantage. Contact my sister site, Pro Trader Strategies. I developed the platform with them, and we designed it specifically to make trading simple for you, to take all of the decision-making process away so you can really decide for yourself what you want to do. Now, you can email them or call them directly. That link you see at the very bottom will take you to the $7 sign-up page, but it's not a live link. If you look on the chat box on the far right-hand corner of the GoToWebinar column, a live link is just posted seconds ago. That will automatically take you to the $7 sign-up page. You can get more information. If you're having any difficulty or if you have any more questions about the platform, contact Pro Trader Strategies. They have trading consultants manning the phones right now. They would be happy to answer any questions you have about that. It's only $7 for 30 days and you're not locked in. After that 30 days, you're automatically canceled. If you want to continue, I believe it's only $97 after that. Think of the other platforms you have. Most of them on a monthly basis are anywhere from $200 to even $500 per month. At the most, you would be spending $97 per month for what you're going to be getting right now. This is a great way to really see how you can take charge of your own trading and a great way to simplify it as well with the Fluid by Cellline. Okay, so take advantage of this. I'm going to answer any questions you may have. Let me see here. A lot of people were asking about, yeah, unfortunately, I'm sorry, we closed down the live charts. But remember, with this $7 offer, you can do the exploration yourself. $7, trust me, that's a very inexpensive price to be able to have all this information easily accessible to you on a minute-by-minute basis, okay? So you can have it. Yes, we're in the Pacific time zones, people are asking. You can have this in a matter of moments. You can just punch up, say you're interested in buying or selling a stock, just punch up the Fluid feature and it's right there. And you can decide from what I teach you that, okay, the slope is strongly upward or downward, we're oscillating above or below, or let me see what the weekly chart is doing. And this all helps you to make the decision, not us. Remember, 80% of all traders fail because you're relying on someone to decide how to trade for you. We want you to decide how to trade. That's why we provide you with the tools and techniques to make it simple, okay? Now, a lot of people are saying, what do you look for if the market is indecision? Well, if the market is in indecision, then that means it doesn't know what it wants to do. In other words, let's say you're driving in a car with someone and they don't know how to drive. They don't know what they want to do. They don't know whether they want to turn right or they want to turn left. Well, do you want to be in that car? If you're trying to get from point A to point B, that's not the car you want to be in, right? You want to be with someone who says, oh no, I know how to take you where you want to go. So in other words, if the market, whatever you're trading, looks like it's an indecision, then switch to something that isn't an indecision. Switch to a different market. Switch to a different time frame. You see how you can make your own decision? You don't have to rely on someone telling you, well, let me go to this chat room and see who they like in the 5th race. You know, that's the way most traders trade, as if it were a sporting event or a horse race. This is your hard-earned money. You shouldn't rely on someone else to make those decisions for you. You should be in charge of your decisions, okay? This is what our goal is, to make you in charge. We offer strategies and techniques, but ultimately, they put the power in your hands for you to decide, not us. I do not ever trade for anyone. I do not tell anyone what to buy or sell. I do not ever tell people what my opinions are. I just simply provide them with the education so that they can decide. In my opinion, that's the only way you will become a consistent trader, okay? Now, as we close out here, this is a great offer for 30 days. Get acquainted with us. See how it works. $7. I mean, if you went out and bought a cup of coffee right now, most likely, if you got one of these, highfalutin type of coffee, from a chain, it would probably cost you more than that if you got all the sugar and all the cream and espresso and everything. So I'm sure $7 for 40 years worth of education is a good, inexpensive price to get all of that, okay? And plus, one thing we didn't mention is that you're going to have mentoring correspondence with myself. If for any reason you don't understand something with the buy-sell line or with steps or with the scanner, you can always contact me or tech support, and we will answer any question that you have, okay? You can contact me via email. You get my personal email address, and I'll answer your question as soon as possible. So you have me as your mentor and your guide right there along with you. I'll be there with you every step of the way, okay? I hope you got a lot out of this today. Thank you for taking time out of your Saturday morning to join us. As you can see, we are first and foremost an educational company. How much time and devotion and sincerity we put in to really trying to educate you. So I hope I was able to educate you today in some form or fashion. Thank you so much for attending. Enjoy your weekend, and I look forward to all of you becoming new members of mine at the PTS Primo Charting Platform. Thank you so much. I'll see you next time. Bye-bye.